What's all this business about Goldbach levels?
In this video, I'm going to provide more insights into ICT's secret Enigma trading algorithm, and specifically, I'm going to show you how Goldbach and the power of three numbers can be used to trade market maker models. So in this video, I'm also going to go over how new week and new month opening gaps can be used to understand which power of three is running so that you can trade both algorithms 1 and algorithms 2. Okay, and these are Goldbach algorithms. If you would like to understand exactly how I trade time and price using my golden bullet algorithm, then there's a link to my mentorship below. And if you would like to learn more about Goldbach, there's a link to Hoppy's official Goldbach book in the description to this video. Now, I'm going to demonstrate the price action from this week and specifically how market maker models can be traded using Goldbach. Okay, so I'm on the 4-hour time frame. So normally, I think a lot of my trades, you see me showing you how you can trade on lower time frames and you can scalp specifically using the 27 power of 3. But in this case, I wanted to show you how the higher time frame price action was obeying the rules of Goldbach. Now, if you are new to Goldbach, then maybe watch my introduction to Goldbach videos on my channels. If you just order my videos by most popular, you will easily be able to see those Goldbach explainer videos, and that will go over all of the basic Goldbach concepts. So this is specifically on how you can trade Goldbach. Now, in this case, we're on the 4-hour time frame because we want to understand the higher time frame trend, and the Goldbach indicator that I prefer is the one by Pro Muck AJ, which is the AMD power of 3 Goldbach levels. So loading this indicator up. So you can do this with me also, so you can practice how you can set up the Goldbach indicator and how you could trade market maker models. So using the 243 power of 3, okay, and we're having no shifts on this, okay, so there's no shifting up or down, just the 243, the raw 243. The things that you really want to look into, and these are things that I haven't shared publicly, are new week opening gaps. They give you really big clues on how the algorithm is running and how Goldbach is configured for the algorithms that are going to play. All right, so if we look at the current price action, okay, so the first thing you can see is at the beginning of the month, okay, so the end of last month, 30th of June was the new monthly candle, right? You have that new week opening gap, right? This is a big clue on how Goldbach is currently pre-configured by the market makers. Now, what is a new week opening gap, right? Well, let's think about what a fair value gap is first. Okay, a fair value gap, let's say we are looking at this fair value gap here, is the algorithm only providing prices one way. Okay, so it's only allowing you to buy within this range. Okay, there are no sell orders. Okay, now in actuality, it's not offering prices all the way through the range. Okay, it may offer an opportunity to buy here and then slightly higher here and then here and then here. This way, price moves rapidly up. Okay, it's not offering you both buys and sells, which are what the wicks are, and it's not offering you sells. Okay, predominantly it is moving the buys higher, so price is forced to shoot up. Okay, now have a look at a new week opening gap. What is that telling you? Okay, price closed here on the Friday, and then the next price that was offered was here. Okay, so buys were offered, but buys were offered here. Thus, new week opening gaps are serving the same function as a fair value gap. Okay, it's not allowing you to sell within this range. It is forcing price higher. Now, new week opening gaps are hints as to which power of 3 the algorithm is running. So you'll see that this new week stroke new month opening gap, which GB partition did it fall in? It was in the fair value gap GB partition. Okay, so this gives you a very big clue that this is 243. I'll show you here. 243 is the power of 3 number that's being used. So a number of questions I asked is, how do I know whether I need to half shift or not? Well, this is a very big clue on which power of 3 is running and whether you need to half shift it or not. Okay, the new week opening gap. Now, the second thing is the extensions. Okay, the extensions are the extremes of the dealing range, because the 243 power of 3 essentially tells you what the dealing range is going to be. And the extensions are the very extremes. Now, what did we have at this extension? Right, we had relatively equal lows that were swept. Can you see that? Relatively equal lows were swept into the extension. Right, this is a very big clue that an algorithm may take off. Relatively equal lows swept into the extension. Okay. Then we had a new week opening gap in the fair value gap partition. This is a very big clue now that you know the power of 3 that's running. Right. And what are the algorithms that we know? Okay, there are algorithms 1 and 2, where algorithm 1 is we go from the low to the order block, and then the algorithm terminates at the opposing fair value gap. Right? And what happened in this case? We had the turtle soup create a fair value gap or a new week opening gap. We retreated and retraced from the breaker. And what did we fall down to? Let's have a look. So these candles here are an order block. Okay, the reason why I don't include this last candle is because this area, this partition, is actually the rejection block partition. Okay, so it's not just about down close candles, it's the down close candles that fall in the order block partition. Okay, so there is your order block. So what did we do? Turtle soup, retrace from the breaker, filled the new week opening gap, and we have mitigated this order block. This is algorithm 1 now taking off. And this is, when algorithm 1 is working, okay, it's very hard to get into it once you miss the initial move. Okay, that's how you know you're in a market maker model, right? If price just takes off on one side and you can't get into fair value gaps like this one here, like this breakaway gap, as ICT calls it, then you're probably in a market maker model. Don't try to chase it. You can catch it on the way down. Okay, and we know exactly how high it's going to be because we know that we are running the power of 3, 2, 4, 3. Okay, based off the extension, the turtle soup into the extension, and the new week opening gap. Okay, we ran up until the opposing fair value gap, which is here, and that was when we had our big retrace. You see that? We had one run up higher until the high of the range, at which point algorithm 2 started. Now, what is algorithm 2? Algo 2. Okay, we go from, typically from the rejection block to the breaker. Okay, I tend to say X though. I don't really mind if it retreats from the breaker or some other point. Okay, it then goes into the fair value gap, and then it terminates at the opposing order block. Okay, this is ICT's YouTube 2022 model. Okay, but once you understand how Goldbach works, that model makes a lot more sense. So what did we have? We went into the rejection block level, we retreated down, and then we had our retracement. Okay, where did we have our retracement to? To the fair value gap in the fair value gap partition. See that? And now we are in algo 2. Okay, so we would expect to terminate at the opposing fair value gap. So if you were to come into this trade suspecting it's an algo 2, and you went short, and maybe you had your stop at the swing high, and you're targeting the order block, okay, that is almost a 4R trade. Now, of course, you can have a much, much tighter stop than that, but just being conservative, if you're happy to put your stop above that candle, because you shouldn't go far higher than this fair value gap, then that's an 11R trade. Okay, this is how you can use the power of Goldbach to really enhance your trading. Now, if you did get into this algo 1, where could you have TP'd? Right? What does ICT tell you? You want to buy in a discount and sell in a premium. Okay, so once you know what the dealing range is, and we do based off of Goldbach, this is the low, the dealing range, this is the high, we know that the premium starts in equilibrium. And he typically takes his first partial when you have equal highs in a premium, or the first liquidity. What do we have here? This is equilibrium. These are your equal highs. Now, if you go down to a lower time frame, you'll really see that these are many equal highs. Now, if we run our vertical line down, okay, you'll see that we swept those equal highs and then we retreated massively. Okay, so this is really the power of Goldbach, how you know which dealing range to use, okay, where to come into the trade, what is a valid order block, okay, what is a valid fair value gap, and now I've shared with you the secrets on how you can start configuring your Goldbach dealing ranges based off of new week and new month opening gaps. Okay, if you would like to learn specifically how I trade time and price using the golden bullet, which uses dynamic Goldbach dealing ranges, so way more advanced than what I teach on YouTube, then there's a link to my mentorship below.